Hello and welcome. You're watching Let's Talk Business. I'm Vedant Agarwal. Well, starting right ahead with the markets. Well, benchmark indices declined through the day today for the second consecutive session, dragged by losses in pharma and private banking stocks. And on the other hand, the PSU banks rallied as well. Hiral Dadia with the wrap of all the market action.
Second consecutive session of decline is what we've seen for the markets, and a third week in a row as well overall. Clearly, if you go to see in terms of where markets are concerned, 0.6% lower is what Nifty as well as Bank Nifty ended, and we've ended below the 19,450 mark. In terms of sectors, it was the pharma index which dragged markets as well, along with the banking majors like ICICI Bank as well as the HDFC. But overall, if you go to see in terms of the PSU bank stocks, that was the top gaining sector as well. The breadth has been in favor of the bears overall in today's session. Clearly, names like HCL Tech on the back of the order win, Power Grid, Titan, Grasim as well as Tata Steel were the top gainers in trade today, whereas on the losing end, you had names like IndusInd Bank, QPL, Asian Paints, SBI Life as well as a Hindalco. Let's quickly look at few of the news makers in trade today. So overall, the Hindustan Aeronautics that reacted in trade today on the back of profit numbers that were announced. Divki Talk Transfer got an order win on the back of which that stock was in focus. Apollo Tyres plunged in trade on the back of a weak set of numbers. Apollo Hospitals reported numbers as well, and the stock paired losses as the Q1 revenues rose, whereas the profitability declined for the counter. Apart from that, let's see which were the other names that were in focus as well. In today's session, you had names like Highways on the back of the DPU that was announced. You had Raymond that was in focus as well on the back of earnings. InfoEdge was in focus, TTK Prestige, NIIT, Sidus Life Sciences, Kalyan Jewelers. These were a few of the other names, as well as the Tilakar Industries, who's gone ahead and prepaid 176 crore restructured debt of Edelweiss Asset Reconstruction. So overall, a lot of movers and shakers in trade today, specifically in the broader markets, but clearly the mood on the street remains negative, where we've ended lower for a third consecutive week, and this phase of consolidation is expected to continue, is what analysts are indicating so far, and it's end of the earnings season as well. That's all that we have overall in terms of the market so far. Back to you.
And well, moving now to the other big headline, the National Company Law Tribunal approved the $10 billion mega merger between Zee and Sony yesterday. What does this move mean for Zee Entertainment? Elara Securities' Karan Taurani believes there's a long way to go before Zee hits the 600 mark.
I don't think 600 is anywhere close. I think if you look at the multiples, which I told you about 20x, so I think because of that 40% discount, I think the best case scenario for a stock, even if you look at it from a 2-year horizon or a 3-year horizon on a forward basis, would be somewhere closer to that 400, 420 mark. But as on date, I think we have a target price of 340 of the stock, wherein we are assuming 20x forward PR for the broadcasting piece, and we've assigned a growth rate of about 5% for the merged co, and putting synergies into perspective, putting the OTT losses and the losses from the sports business. EBITDA margins, as I told you, are in the range of 16 to 19%. And I think 340 is a target price. And we've also, valued the cash here. So, Sony will also bring in about $1.5 billion of cash. So I think the console market cap of this entity could be somewhere towards 68 to 70,000 crores. And I think basis that if you take out, Zee's current stake, which is somewhere about 47%, you get a target price of 340 of the stock.
And well, the other much talked about aspect of the story, can the Zee Sony merger give a flip to the media space? Well, as an investor, are there opportunities or not for you in the space? Rushabh Sheth of Karma Capital shares his views.
So I think yesterday we hit a large inflection point in the media space with the consolidation now really giving momentum in the overall media space. Unlike the West, in India, the local players are also the largest players in the OTT stroke digital space, except for maybe some of the global companies like Google or Meta. So from our perspective, media has hit an inflection point yesterday, and we think that this opportunity is only going to, in my limited understanding, going to explode. Because at the end of the day, you have 140 crore people to entertain. The same logic, where you see significant delta in consumer discretionary spends. And now there are very few companies to do that. So, overall, if you look at it, the top three broadcasters, digital media players will control 70-75% of the market, which is a significant amount of consolidation. And from here on, I mean, and we still are paying very little. So if you look at us, most of us on a linear TV spend maybe less than 300 rupees or thereabouts for watching a significant amount of channels for the month. So we sense that there is a huge opportunity in the media space as the screen proliferation continues and the number of players now in that space to do or to generate content to keep the 100 odd crore people engaged is very limited. So we think that this is an inflection point for the whole media business.
And in other news, the IT sector is under pressure amid global economic headwinds. Should investors looking to stay invested with a long-term investment horizon in mind opt for the IT sector? Well, Vikas Khemani of Carnelian Capital Advisors shares his views.
There is more of IT in every company's life. There is more of IT in every individual's life. Every company globally has to spend huge amount of money on transformation, in their journey. Currently, just think about it, most IT companies are still winning good orders when there is a recessionary expectation in the US. So if a CEO is giving an order, he is giving only a survival kind of order, not the growth order. So according to us, when the US environment settles down, interest rate starts coming down, the growth order will come still, right? So, when you are doing very well in a survival growth order phase, what happens when the growth order comes? So according to us, IT is still a very good thing. It is the best play on interest rates coming down in US. And, within that also, there are segments, by the way, even now, like ER&D is a space we like a lot. Aviation is a space we like a lot, which is growing 20% plus. So you don't have to, and there are mid-caps which are doing well. So broad brushing IT at overall space, I think there is a narrative, I know that, in the market right now. And we've never been perturbed about, we can take, that kind of consolidation or correction in the face. And I think my IT stocks have done very well in my portfolio, at least I can tell you over last 3-4 year period or even last 12 months period. We added a lot of IT when the pessimism was at peak.
And when amid the government's push, should you bet on India's infrastructure story? Does infrastructure as an asset class offer a unique and large opportunity to domestic investors? Listen in to what Neo Asset Management's Hemant Daga had to say.
In the last 15 years, if I can remember, the government has, commissioned projects worth 40 lakh crores. 20 lakh crores is under execution as of now, already for the next 2 to 3 years. And the government has a target to commission 120 lakh crores, Neeraj, in the next 5 to 7 years. That is the stated government policy.
Sure.
So you can understand the opportunity. 120 lakh crores will require 40 lakh crores of equity capital.
Sure.
That is what investors can participate in. Just to give you some context, and Abhishek and me were having a chat. Our equity markets are approximately 3.5 lakh crores. 20% is retail participation, right? 70,000 crores. Infrastructure investing in the next 5 years is half that opportunity for investors. And this is an opportunity where there are large global funds already participating.
Open to Indian investors?
Yeah. Not open to Indian investors.
Got it.
They are largely open to offshore investors. So there is offshore money already participating in a big way.